Welcome to today's IVG Market Blast. I'm Brad Alexander, and today we'll take a look at Forex trading on gold, the NASDAQ, the S&P 500, Aussie dollar, dollar yen, dollar Swiss, and the US dollar index. Just a reminder that these videos are only an observation of current market conditions, and these are not to be considered as trading advice. And don't forget to like, subscribe, and keep up to date. Last Friday, the U.S. non-farm payrolls came out and more than doubled the analysts' expectations. This drove the U.S. dollar and many other assets higher, as we can see on the U.S. dollar index chart. If you're new to following economic news, the driver isn't a good figure or a bad figure, it is based on how much the actual figure misses the forecast. So, you will see many instruments with similar price action, like this hourly chart on dollar Swiss, with a big move, then an attempt at retracement. However, we see the trend on US dollar strength continuing, so watch the prevailing markets, bearish or bullish. For example, we see dollar yen continuing this uptrend after the NFP retracement and the stochastic oscillator picking reversals along the way. I encourage you to look at all US dollar pairs to see how the NFPs have affected price action and all the opportunities. For example, Aussie dollar opened with a gap on Monday, the gap was filled, and price is consolidating in a slight uptrend. The early morning chatter in the markets includes the rebounding of the Asian markets like the Nikkei, where we see the price action bouncing off the lower trend line and an oversold stochastic oscillator. Basically, investors bought the dip. The question is, will this optimism carry over into the US indices? We see the effect that the NFPs had on the NASDAQ. Investors prefer to invest in companies when they are not worried about the Fed raising interest rates, and a fat employment number almost always does this. But AI and tech enthusiasm has returned to the markets, and investors are buying the dip here too. We're getting mixed technical signals with MACD showing us a bullish crossover. The S&P 500 was equally affected, and we see slightly more optimistic technical signals. We can see how the NFPs affected gold as well, with the news driving price action down to this key level in this descending triangle. If we move out to the 4-hour chart, we can see that trading the downtrend was the right option and that the stochastic oscillator did a great job picking the reversals up and down. However, after the NFP shock, we may want to wait for the dust to settle and let this consolidation work itself out. Also, tomorrow we have US CPI, which will give the Fed another clue as to inflation and the status of future interest rates, which will affect, again, the strength of the US dollar. That's all for now. CFDs and FX are leveraged products, and your capital may be at risk.